Today's focus, whales have stopped selling and holding Ethereum is actually losing money. Is it a bull market or a bear market bottom? Everyone has their own take on this market trend.
It's one of those times where you get a series of supply shocks.
Today, I'll tell you what the big money is waiting for and what kind of game Trump is planning. Tuesday, March 31st. This is BTV Chinese channel, Where's the Coin Chain? I'm Michael, greeting you from Hong Kong. Let's first look at the 24-hour Web3 data you need to know. On-chain data shows a very clear signal. Binance's big players are backing off. When Bitcoin dropped near 60,000 before, whales were frantically moving coins to exchanges. On February 4th alone, over 11,800 Bitcoins were dumped. Then, by late February, it went from 1,000 coins a day all the way up to around 4,000. So clearly, they were looking for a spot to offload. But now, the transfer pace has changed. The 30-day average has dropped to 1,600 coins. Compared to 4,000, that's more than halved. Simply put, big money isn't in a rush to sell and has started to wait and see. This change is crucial, because if whales don't sell, market selling pressure will significantly ease. With current uncertainties still present, this wait-and-see approach is actually the best support for the price. So what you're seeing now is volatility, not a crash. Big money is waiting to see how to rebalance their portfolios next. All right, let's look at Ethereum. The most awkward thing for Ethereum right now isn't the price drop, but that holding it doesn't seem to make money. On-chain data is very clear. Over the past 30 days, Ethereum's average return is negative 0.00039, and the Sharpe ratio has dropped to negative 0.0012. Simply put, you're taking on market risk by holding Ethereum, but investors aren't getting the returns they should. This is actually a very dangerous signal in the market, suggesting that Ethereum capital will become more cautious. Although Ethereum is still hovering around $2,000 and looks stable, the underlying momentum is weakening. If capital isn't willing to chase, speculative heat will die down. Historically, this state doesn't lead to an immediate breakout, but rather a period of sideways consolidation until new capital or a new narrative comes in to restart it. Now, many are starting to worry about a bear turn, but on-chain data gave the answer long ago. If you watch our weekly reviews, we already cut our positions by 80% around 95,000. So now Bitcoin's spot returns have also pulled back from previous highs into a neutral range. This indicator essentially shows whether people are actually making money in the market. Historically, if this indicator hits deep negative values, it's basically a bear market or near the bottom. But this time is different. The indicator is only in the neutral range and hasn't entered the actual loss zone yet. What does this mean? The market is indeed cooling down and making money has become harder, but a crash is still far off. So right now, it's more like a slowdown and adjustment rather than a reversal. In other words, this downward trend is far from over. It's just entered a halftime break. It's not the bottom until everyone is in a panic. All right, the first 5 minutes were meant to give you a quick sense of the current state of the crypto world over the past 24 hours. Now let's dive into the news. Sorting through the news is about knowing what major events have occurred as you enter a new sector and which ones are closely tied to your wallet. Now let's take a look at today's headlines. There's an old saying in crypto, success by Trump, failure by Trump. Trump has always been an unpredictable variable that's very hard for the entire risk and capital markets to grasp. So why say success by Trump? Without Trump, there'd be no stablecoin bill, and Bitcoin definitely wouldn't have reached $120,000. But what about Trump now? He's too headstrong, right? He's keeping to himself now, no longer upholding global interests. Now, it's a race between Trump's rhetoric and the speed of the dollar's flight. Now, if the energy issues in the Strait of Hormuz and the entire Middle East continue to escalate, you must realize that rising energy costs will surely drive up overall consumption, which means expectations for rate cuts will have to be pushed back. What follows is a chain reaction of inflation and the logic of repricing risk assets. So this is the biggest variable we need to be wary of right now, Trump.
Last night at Harvard, Powell stated that if long-term inflation expectations remain anchored, the Fed may not necessarily need to raise rates again due to oil price shocks. This is because interest rate tools are not well suited to directly address supply-side risks like energy. However, this also means that as long as the situation in the Middle East drives up oil prices, the pace of rate cuts expected by the market will be slowed down, and easing trades will need to be repriced.
It's one of those times where you get a series of supply shocks. First the pandemic, then the much smaller one from tariffs, and then we're getting now an energy shock. No one knows how big it will be. It's way too early to know. As I mentioned, we do think our policy is in a good place for us to wait and see.
Also yesterday, Senators Cassidy and Lummis introduced the Mining America Act to promote digital asset mining facilities, bring more mining rig manufacturing and key supply chains back to the U.S., and further integrate Trump's March 6th executive order on establishing a strategic Bitcoin reserve into the legal framework. In other words, the U.S. isn't just telling a Bitcoin story, it's building a comprehensive institutional backup of domestic manufacturing and national reserves.
All right, let's take stock of what's on Trump's desk. First, not just the US. Global oil prices are rising, right? The Fed has said that cutting rates won't be easy. It depends on the inflation outlook. Meanwhile, Congress is discussing the stablecoin bill, how domestic mining should proceed, and the strategy for Bitcoin reserves. So you see, all of Wall Street is still quietly buying up Bitcoin spot ETFs. Therefore, the entire US system is no longer just betting on the rise and fall of a coin's price. They've synthesized energy, currency, and digital asset sovereignty into a new narrative. This is preparation for a long-term battle. Personally, I'm not a believer in fiat assets, so I hold almost no fiat currency. What I do have is a small amount for daily expenses. As long as you have Bitcoin, you can travel the world now. There are many ways to convert it to USDT, right? So now, with the help of AI, many niche things can gain a massive stage by leveraging AI's power, such as symbols and memes. And various crypto personas will become widely popularized. So, as the market cap of stablecoins grows and issuance increases, and as the awareness of reclaiming asset ownership grows stronger, digital assets, especially payments, will definitely be a trillion-dollar market.
Block Square is pushing to open Bitcoin payments to about 4 million merchants worldwide. Merchants can accept Bitcoin directly through POS systems and achieve instant settlement via the Lightning Network, while also supporting the automatic conversion of some income into Bitcoin. This means Bitcoin is moving from an investment asset to a payment tool, lowering the barrier to entry and accelerating the expansion of real-world transaction scenarios.
And you're seeing that it's not just the money that was centralized, it's not just the media that has been centralized, but now intelligence is centralized.
On the other hand, the Bitcoin Girl, generated by Musk's Grok AI, has quickly gone viral on social platforms and sparked discussion. This type of AI content is becoming a new narrative amplifier, making crypto culture easier to spread through visual and emotional expression, increasing attention and engagement, and repeatedly driving periodic market hype throughout history.
So you see, besides technical indicators suggesting a bear market, look at psychological indicators. Bitcoin used to be called illegal finance, but now it not only has ETFs, but can also handle payment settlements in the payment sector. Furthermore, Bitcoin and digital assets, their mining and national strategic reserves have all been put on the agenda. It's no longer a niche financial management tool. If you still view it as illegal finance or just a risky investment, I can only say your perspective is outdated. So, given all these various circumstances, bear market, how can it be a bear? The conditions for a bear market just aren't there. US dollar interest rates are still above 3%. The last time it hit $70,000 during the last bear market, what were the interest rates? 0.2 something percent. So we can't just look at price fluctuations anymore. We have to look at the underlying logic. The underlying narrative has changed its rhythm.
Hong Kong's local licenses will be decided in April, and HSBC and Standard Chartered are already lining up for them.
And we believe the first batch of stablecoin issuer licenses will be issued within next month.
AI has driven white-collar salaries to rock bottom, while a 30-something electrician's annual salary has reached $280,000. The old pricing system is becoming obsolete.
All right, I'm in Hong Kong. After April begins, Hong Kong is going to do something big, which is the final sprint for stablecoin issuer licenses. What's next? How tokenized securities will enter the mainstream clearing system. So you can feel that Hong Kong isn't just issuing stablecoin licenses, it's forcefully pulling digital assets into mainstream financial infrastructure. So this move by Hong Kong is actually about positioning for payments, clearing, cross-border flows, and compliance. Institutionalization.
The most certain information currently is that Hong Kong will issue fiat-backed stablecoin issuer licenses rather than exchange licenses. Legislative Council documents from last October show that as of September 30th last year, the HKMA had received 36 applications. The number of initial licenses is limited. In a speech on February 11th this year, John Lee narrowed the timeline to within next month. Market expectations have shifted from whether they will be issued to who will be approved first.
The Hong Kong Monetary Authority is actively processing licensing applications, and we believe the first batch of stablecoin issuer licenses will be issued within next month.
Two additional pieces of information show that Hong Kong has included tokenized securities in its regulatory system. CMU OmniClear is responsible for platform construction, and the third phase of issuance has reached 10 billion Hong Kong dollars. HashKey's revenue last year was 723 million Hong Kong dollars, with a net loss of 1.084 billion. Stablecoin trading made up 48%, and retail trading volume fell from 353 billion to 73.4 billion Hong Kong dollars, an 80% annual decrease.
Actually, we can summarize what Hong Kong wants to do in one sentence. If Hong Kong's stablecoin bill is implemented, Hong Kong is very likely to become the first, or rather, Asia's center for using crypto assets for clearing and international settlement. Just think about it. Global transfers for less than 1 cent arriving in seconds. Hong Kong really can reach the top. We've been trying the AI morning briefing at 8 a.m. every day for nearly a month now. This is about discussing AI news from an AI perspective. So in the process of using this lobster and using AI, there are a few experiences I can briefly share with you. First, if possible, stay away from domestic large models. Second, when embracing AI, don't have AI execute your original traditional thinking logic. Just tell it the result directly, and AI can give you the most optimal optimization. You'll find that your original path was a complete waste of resources. Third, what kind of jobs will be replaced by AI? To summarize, if your job or profession can be completely described in words, it will definitely be replaced by AI.
As AI infrastructure grows, demand for US data centers is rising fast. There's a shortage of power and engineering jobs. Some electricians under 30 earn annual salaries of $240,000 to $280,000. Over the next decade, about 300,000 more electricians will be needed. Companies compete with high salaries, and the supply-demand gap is raising income for skilled jobs.
Large part to macroeconomic kind of climate and interest rates, and companies invest in less in general.
Beyond data centers, the AI boom is also driving growth in industries like power and energy, semiconductors, server manufacturing, cooling systems, and enterprise-level AI software. McKinsey predicts that by 2030, about 70% of data center capacity will be used for AI workloads. Global investment in AI data centers could reach $5.2 trillion. LinkedIn data shows that job applications mentioning AI or generative AI are growing 17% faster.
So since February, almost every day, the progress of AI has been brainwashing me anew. This anxiety is an internal to external kind of anxiety. Why? Well, academic degrees will definitely lose value, right? Because knowledge is no longer a scarce commodity. Secondly, experience might not be as valuable anymore because AI will completely compress your time. Thirdly, the information gap will also disappear. AI can bridge in seconds what took you over 3 years to produce. Conversely, 3 things will become very expensive: judgment, execution, and whether you can turn AI into your own personal plugin. In the future, there will only be those who can't use AI and those who use it well.
Fundstrat founder Tom Lee has declared that the crypto mini-winter will end in April. The problem is, his March predictions for Bitcoin and Ethereum price increases have all fallen through, with Bitcoin even seeing a 24% correction. The community on X has exploded. Some say it drops every time he speaks, while others say that after the whole internet mocks him, it rises every time. The New York Times reports that Binance's internal compliance team discovered $1.7 billion long ago, flowing into specific restricted entities, allegedly crossing US regulatory red lines. Even more shocking, the clues sat in the system for over a year without being addressed. Senators have launched an investigation. This matter is far from over. The Bitcoin Layer 2 project BitLayer plummeted 78% in a single day, hitting a low of $0.041. Backers include Polychain, Franklin Templeton, and Framework, with over $25 million in funding. Voices of doubt are rising on X as trading volume surged 648% in one day, with a massive concentration of positions liquidating and fleeing. Bloomberg revealed that after the major market correction last October, many traders began switching to rival platforms. Binance then urgently tightened market-making rules, but market trust has already cracked. This is a situation unseen since it began dominating the crypto market. Renowned trader GCR has publicly vowed to push a meme coin to a $200 million market cap. Naming coins like VINU and FINU, X is buzzing. Some are following the trend, while others are shouting that this tactic is too deep. Just watch, don't rush in.
So why do I say the future only belongs to those who use AI well and those who don't know it at all? Where did the middle ground go? What about average users? They'll be left behind and phased out. You're better off not knowing AI and living a quiet life. So, in this era, you might not be given time to slowly gain experience or even a window of opportunity. AI will accelerate a total overhaul of all industry rules. You think you can still work on the basics, but others have already drawn the map. So you'll realize it's not that you're incapable, but that the pace of AI and productivity has changed. Do you know what the most painful kind of growth is? It's not growing step by step, but suddenly realizing you've been left miles behind. Either you accelerate your own upgrade now, or you'll be auto-phased out by the system. There's simply no buffer zone for the middle ground. Right now, opportunities are equal for everyone. It's not that they're gone, but this window is closing faster and faster. Those who act first get the rewards. Those who wait will be replaced. Remember this, the times won't wait for you to be ready, but the times will reward those who are already taking action. All right, that's all for today's show. Here are the member benefits we've put together. We hope you'll join us as a member. Let's hustle together and slowly get rich together. See you tomorrow.